Welcome everyone to the Qualified Money for Long-Term Care webinar. I am Zach Engel, a brokerage director at BackNine. A lot of what I do is advanced case design for my advisors as well as concept and strategy education. One of my specialties is helping financial advisors help protect their assets under management. Just a heads up, everyone will be muted for the webinar. If you have any questions, feel free to call or email me anytime following the presentation. My contact info will be at the end. So let's get started. First off, everyone in the insurance industry has a disclaimer, so here's ours. What is insurance anyway? It is the leveraging of money to protect your assets. You have health insurance to protect against healthcare bills. You have auto insurance to protect you in the event of a crash or damage to the vehicle. Disability insurance in the event you can no longer work. Life insurance, of course, to protect loved ones in the event of a loss. Homeowners insurance to protect against fires and theft. Now, there's one last piece to keep your client savings from falling out the bottom, and that's long-term care. Are you thoroughly protecting your client? As you can see, there is far greater chance of needing long-term care than, say, having a major car accident or a house fire. Let's take a look at a few more troubling statistics. The average cost of care is substantial and can create a heavy burden for a client and their finances. The average cost of a private room in a nursing home can be around $7,300. And as you can see, that adds up fast to around 90 grand a year. And that is in today's dollars. What will that look like in 20 years? The average stay for a female in a nursing home is 3.7 years versus 2.2 years for a male. And with inflation and rising healthcare costs, the numbers get large quick. Can your client's portfolio or retirement savings stand up to $400,000, $500,000, even $600,000 in care? Almost everyone will need long-term care at some point. 70% of people over 65 to be precise. And 40% of those will need specialized care in a nursing home. And as I mentioned before, women require care longer than men. Now, there are two questions every financial professional should ask their client. First off, you may never need care, but if you did, how will that affect your family? Is your spouse around to help you out and manage that care? Do you have adult children living nearby? Would they even want to help? And how would that affect your family dynamics? Would your adult son who flew out to help be able to take a leave of absence from work? Would you maybe be able to compensate him for coming out and helping you with that care? And second, if you do need care, how will you pay for it? Do you qualify for government assistance? Few do. Do you have long-term care insurance? Have you prepared well enough to self-insure? As we saw in the previous slides, it can be quite expensive. Now, let's talk about where the money's coming from. There are three parts to most clients' portfolios. As a client ages, they become less risk tolerant and start allocating their money to less aggressive and moderate strategies to protect against their potential for loss. This gives you a jumping off point for conversations with your clients. Let's take a piece of that conservative portion of your portfolio to protect the rest of it. Now, let's jump into the meat of this concept. How does asset-based long-term care work? Asset-based long-term care works by repositioning qualified money to purchase a tax-qualified annuity. The benefit from the annuity is distributed over 20 years, which is used to pay the premiums of a whole life insurance policy with a long-term care rider. The taxable event created from the transfer is minimized by spreading it out over the 20-year life of the annuity. The distributions from the annuity are used to fund the whole life contract, allowing the purchaser to obtain the non-reportable tax-free benefits associated with life insurance. So, to simplify things, you use qualified money to purchase an annuity. The annuity then funds your whole life contract. So, let's go through a case study. We have John and Michelle. They're 65 and 63, and they're looking for long-term care coverage. After speaking with the financial planner or their insurance agent, they decided to use qualified money from their IRA. They took $100,000 and 1035 transferred that into an annuity. The annuity has 20 disbursements that fund a 20-pay whole life contract with a long-term care rider. As you can see, the whole life contract required $6,526 in annual premium, which is equal to the disbursements coming off that annuity. For this example, John and Michelle received $188,000 in death benefit. They also received a long-term care benefit of $3,700 each for 50 months. Keep in mind, if they don't use the long-term care benefit, the death benefit isn't going anywhere. Something else to keep in mind, if both of the insureds go on claim, the benefit amount is doubled. So for example, in this case study, they received $3,700. So if both of them were to go on claim, that number would go to $7,500 each. Lastly, this product is 100% liquid in year 10. There are some additional rider options also available. You have inflation protection at 0, 3, and 5% compounding. You have the double coverage rider. So for John and Michelle, they had 50 months of coverage and added this rider, which turned that 50 months into 100 months. Now this rider has a out-of-pocket cost of $1,400, having chosen the 3% inflation option. There is a lifetime coverage option that extends the long-term care benefit to the end of the insured's life. Again, with that same 3% inflation option, the cost of this rider was $2,200. So, one last time, let's go through the features of this so everybody has a good handle on it. You have the unique ability to use qualified money. You are able to minimize the tax event from the 1035 transfer by spreading it out over those 20 years. The product is fairly liquid in year 10, and a 9% surrender charge in year 1, decreasing by 1% every year. It has easier underwriting. It's not traditional long-term care, so going through this process is a little less demanding and a little less scrutinized. You have the lifetime coverage rider, the double coverage rider, the double monthly benefit option when both go on claim, as well as the inflation protection options. So I hope that gives you a good understanding of some of the options available to you using qualified money for long-term care. Real fast, before I let you go, I just want to go over one of the unique advantages of working with BackNine and RGA over others, and that's our producer's place. What I have noticed is the best salespeople are often the least organized. I know I fall into that category. I had an agent earlier this year tell me that had he had access to our portal years ago, he would have been able to retire much sooner. So, a few of the features associated with our Producer's Place portal. You have live case statuses. You're able to track in-force and pending business from submission to approval. You can view commissions, which is great. You're never going to miss a commission payment again. Also, it has the added feature of being able to set up a hierarchy. If you have downline agents, you're able to set up a hierarchy and allocate those commissions as you see fit to your downline agents. You can view your appointments with the different carriers you've submitted business with. You have in-force data feeds. access to all the documents, all the applications, the change of ownership form, any kind of trust documents you may need to get for a client. You have the ability to live chat with your dedicated case manager. We have a quoting engine built in for our term and GUL products. And we have producer statements, which is basically a snapshot of your submitted business and what you have in force. So those are just a few of the options available to you using our portal. Lastly, there's just one question to ask your client. Does it make sense to use insurance to cover some or all of your long-term care needs? If you haven't allocated any money to long-term care insurance, you have allocated all of your money to long-term care insurance. So again, thanks for joining me this morning. I hope that gives you a good understanding of the options available to you. Know that I am always available to be a resource for you. I can help run quotes, illustrations, any kind of concept of strategy, education you may need, or just advanced case design. I want to be a resource to you and help make your life easier. You can see my email address here at zach@back9ins.com and my phone number at 805-413-7573. I hope you all have a great day. Thank you for joining me.